Good morning.
Good morning. How are you today?
Fantastic. It's kind of gloomy here today, but it is nice. It's a nice day overall. Mhm.
Oh, yeah. Well, it's in between a little bit of hotter than usual, and it's cooling down a little bit. But they say next week we're going to get the 90s to 100 for sure.
I was talking to a friend yesterday. She's in Michigan, and it was like 90s in the 90s there.
Wow.
Yeah, so it's hot. We're lucky here in Southern California that is still in the 70s. Yeah.
Yeah. Yeah. A little bit of a breeze. And we're gearing up for a big holiday weekend. Everybody's looking forward to, I'm sure, Memorial Day weekend, which signs the official beginning of summer and summer festivities. So
That's
travel
right.
and all of those things begin to happen.
Yeah, I can see that. I mean, there's a festival going on in Garden Grove area in Westminster, so summer is in the air.
Yeah. Well, I'm excited about our topic today, dealing with foreign nationals and how they can use insurance for various estate planning needs and all of those things. But, we were able to attend a conference, the Outbound Conference. What did you think about that conference and the opportunities globally?
The About Summit in LA that we had an opportunity, you and I attended a couple of weeks ago, and it's a very nice. It's our first time going there, but it's an opportunity to connect with many bankers and internationals, businesses, and there's opportunities here in U.S. and opportunities abroad, right? If you wanted to get a second citizenship, that is a chance for you to go there and talk to these folks and get information how to get a second citizenship in Portugal, right, or in Spain, or in other countries, and what asset is required, or how would you invest, and all of that information. It was pack of great information and an opportunity to connect with so many financial professionals out there. Yeah.
Yeah, and I think it also validated for us that a number of people desire US passports as well. So there's a number of foreign nationals that live in this country and have businesses and things. And with those type of opportunities, or they may be married, they may have a spouse and family. And so for estate planning purposes and business purposes, there are different tools and resources available to assist them along their journey as well. So, how does one begin to consider, their options as a foreign national?
So first, I mean, talking as of how to protect or planning for foreign nationals here in the U.S. I mean, if you here in the U.S., um, whether you're a resident, they classify residents alien or non-resident alien. You are subject to tax rules here in the U.S., especially estate tax that could be going up to like 40% federal tax. So that's quite a bit of tax, right? So how do you, if you wanted to get, protection here in the U.S., as far as we're talking about life insurance policy, cash accumulation life insurance policy that you can pass on to your family, your spouse, your children, or legacy planning, you have an opportunity to do so here in U.S. to have a plan set up, and that could help you to mitigate the federal tax, and that purpose, and also great protection and tax road tax defer and tax free debt benefit, and also income for lifetime income. So
Yeah,
there's
I noticed and the great thing is I noticed that these policies you can either deal with a whole life or a term policy. So you can definitely, if you have particular needs, a lot of times, like when you're planning for a business, for example, for a period of time, you may want to have a term policy that covers the business for 10 years, if that's the time that you expect to be involved with the business or you're planning to exit that company. So just understanding that there's flexibility in however you plan, so you can plan for your particular estate and business needs accordingly. Yeah.
Yeah, for foreign nationals, I mean, if you are a foreign national currently living or planning to live in the U.S., or you own a business here in U.S., or have all the asset here in U.S. Also, if you know your spouse or your you have a spouse here in U.S. and you intended to transfer the asset here in U.S., there are tax liability for that. And of course, you know, you can consult your tax attorney or CPA for more information about this. But the purpose of our talk today is how do you transfer your asset to the next generation without um, worry about, you know, the tax component. So life insurance policy is one of those policy that you get an opportunity to own one and also pass down that asset to the next generation without, you know, worry about tax liability. So it's great to own, you know, a life policy here. And what are the benefits? I mean, what other benefits do you think that, you know, for a person to own a policy here in the US?
Yeah, well, the thing is that because the tax liability can be as high as 40%,
Right.
and you want to definitely, just know how if there are ways to mitigate any of that
Mhm.
liability. Not saying that you shouldn't, you know, expect to have some tax, but 40% is a significant amount of tax. So if you can reduce that number, then certainly that allows your estate to transfer to the heirs or to the causes that you are interested in.
Yeah, especially, you know, why life insurance here in the US if you are a foreign nationals. Or, you know, you could have a connection here, whether you own a property here, or have asset here, or have family here, but you don't have to live here in the US to qualify for a life insurance policy. In this particular case, we want to talk about permanent policy. And why permanent policy? Why would you own one here in the US? I mean, first of all, the stability, right? The US company stability and safety, and also financial stability of the company. Now, the death benefits that may evade US income and estate taxes is also grow tax defer. So compounding interest and grow tax defer, and also tax, you know, advantage distribution here in the US. So we were talking about lifetime income. If you have a policy, you are maybe in Europe somewhere or in other country, and you know you can leave that asset to your children here in the US or your family here in the US, uh, and that can be transferred tax free later on. So liquidity also can be used to protect your asset. So if you have a policy that has cash asset, there you go. I mean, that is liquidity for your heirs. And, you know, if you need to access it, uh, the tax, you know, tax liability is not, you don't have to basically worry about that 40% tax, right? That is a huge amount. And the exemptions we're talking about is a tax about $60,000. So if you have a property here in the U.S., let's say a house, you came here to, you know, buy a vacation home, and let's say one of you are the husband and the wife, one of them passed away. Now, if that property is transferred to the next person, there is a 60%, I'm sorry, $60,000 only exemption. The rest had to be taxed. So that can be a huge amount of tax for, you know, the estate transfer purpose. So compared to that, a life policy can give you a lot more, right?
Absolutely, absolutely, especially when you're looking at not only the estate, but then also realizing that there's a gift tax. And a lot of times people don't think about the impact of a gift tax and how that works in terms of a cost, or how those assets are taxed as well.
And life insurance policy, especially in permanent life insurance, can offer a lot more in terms of asset protections and living benefits. Is also benefits the owner and the beneficiaries. Now, the beneficiary, regardless of U.S. citizenship or not, they still can be the beneficiary of the policy. And the death benefit protection, long-term income tax benefits, asset security, and then certainty in estate planning. So it's all these benefits in the long run if you are a high net worth individuals in a foreign country with an asset of $1 million or more. You are likely to qualify for one of these plans here in the U.S. that you can, for estate planning purpose, right? And also the tax mitigation purpose.
Yeah, no, it's really important to, consider these options. I think that this has been coming up a lot. I haven't noticed, I know you noticed in the news, you heard the conversation, or actually the litigation that's happening with the Presley estate regarding the so-called foreclosure of the estate, claiming that at Priscilla Presley's death, that she had borrowed an amount of money from a company and
Mm.
used the Presley estate as collateral, and that following her passing, that loan went into default, and now they're foreclosing on the property. And so they're saying that this, of course, is a matter of complete fraud. It's fraudulent, and that there appears to be forgeries. But again, it's these kinds of things that people don't think, can show up when someone happens. And so it's so important to just consider, estate planning while it is you, especially if it's about your personal estate. You want to be able to have the ability to make the decisions about the estate. And I think that it's important that families not only make the decisions, but I really think that they should have a family meeting and conversation. And I think the person who is preparing the estate should make it known to the family members, kind of while they're in sound mind, their decisions. Because what I see on the tail end is not only the emotional trauma surrounding the loss, but the emotional and economic trauma resulting from poor estate planning. And so it's a double whammy. People have not only their heartbreak and emotional trauma, but they also have sometimes economically devastating events following the death of a major, member of the family who contributed to the well-being of the family.
These are the things that you can plan in advance. I mean, you don't want to wait until the last minute when you in a situation where you have to take care of a family, financial situation, and also going through that emotions of losing someone is hard enough, and you have to deal with all the financial difficulty at the time. So a policy or a permanent life policy for the estate planning purpose can take care of a lot of headache and a lot of peace, to bring to the family at that time, to protect and to leave the legacy for the children and for the generation to come. And especially, not tax is the major thing that we want to. A lot of people want to focus and mitigate the tax, right? So if you are a foreign national and have a policy here in the U.S. and that policy has a cash value, we're talking about permanent policy versus term, accumulate cash over time. Now you can access that cash without tax. and you can fund your business here in the US, or fund your other business that you have foreign in your in your country, or others, whatever the reason is. So that is a nice thing to have, that you don't have to worry about um, paying the tax portion when you take out the money from the policy as a policy loan. That would allow you more opportunities to acquire more business, and doing business, and take care of your children, especially when you have your children here in the US go to school here, right?
Mhm.
So you need fund to provide for that fee, school educations. So that is one of the resources that you can access your policy to pay for school.
Mhm.
Yeah. So it's, the US based and additional benefits, like US based company here in the US. The contract here in US is very, very strong, right? And thus we're not even talking about financial stability of the company here. And so many of them have been out there for over 100 years. So financial stability is strong, very, very strong. And if anything is the backbone of America, is the insurance company. Don't you agree?
Absolutely, absolutely. I mean, the insurance companies have managed to remain solid or sovereign throughout the various economic cycles, even some of the most devastating, economic cycles. We historically are able to reflect on companies that were able to sustain themselves because of the insurance companies. But when you think about it, think about the strength that the insurance companies had to have in order to meet the requirements of those policy needs, at a time of devastation. So, I always say, wow, it's not only the ability to receive the check, but think of the organization that is issuing the check and their stability and strength. That's so important.
Right. And we're not even talking about individuals policy. The big companies out there like Bank of America and all the banking system, they have a portion of their money, a large portion of it, in the insurance company to
Mhm,
protect themselves because of stability.
mhm.
And if it's a big institution that have big portion of their money in insurance industry, we as an individual, why can't we do the same, right?
Absolutely, absolutely. I mean, this whole thing
Why would
of
they put their money in
encouraging.
there?
Yeah, actually,
Right.
it really goes along with what we've been saying. Our premise have been, learning ways to establish generational wealth, and in order to make sure that you have sustainable measures in place, and being able to recognize that there's a lot of things that not everyone has been exposed to. I mean, a lot of these policies for these various uses, I didn't know all of these different possibilities. It was something that was a curiosity of mine, is to figure out what are some other ways that one could leverage a policy, because I kept seeing examples. And then I remember years back when Warren Buffett purchased the insurance company, I thought, wait a second, why would he be buying an insurance company, Berkshire Hathaway, as we've come
Right.
to know the organization today? And that organization has extended to not only include insurance, but also real estate, brokerages across the US as well. And so, again, when I look at the asset classes that I often discuss with families, in terms of what should be part of a diversified portfolio, because you also need liquidity. You need liquidity available. And a lot of times your real estate is not liquid, it's not easy, accessible liquidity at the time of an emergency, but it's solid collateral and liquidity. So you want to have strong real estate in your portfolio, but you also want to have some other tools that allow you a little more flexibility, meaning that they're instantly able to be accessed through liquidity. So you can request, for example, if you have a event where you need to access cash and you have cash value in a policy, that's like a call to your customer service of the policy headquarters, and you're usually receiving those funds within a couple of days. So that type of liquidity can be important when you find yourself in critical situations.
I have client this last couple of weeks. I help a client who has a policy that has cash value built up, over time, and now he needs the fund to fund a real estate deal.
Mm-hmm.
Instead of going to the bank, borrow the money from the bank, he accessed the cash policy, the cash portion of his policy to fund his real estate deal.
Mm-hmm.
How nice is that?
Oh, it's great,
Because
because sometimes there's an opportunity and its timing is of the essence.
yes, because if you borrow a loan from the bank, you have to apply, and you like home equity lines or a loan, personal loan. You know how long that takes to apply? It could be a month or two before you see the money, right? In
Absolutely.
1 week, the money, it's not even 1 week, 4 days, the money was already in his bank.
Yes. Yeah.
And it
That's,
was so nice that he able to leverage that
yeah.
and fund his business deal when he needs the most.
Yeah.
And then if he doesn't need it, he can put it back in again. It's like his own
Absolutely.
bank. So
Absolutely.
he was thrilled when I said, "Oh yeah, this is how much you can take out to fund your deal if you need to."
Yeah.
And was really happy about it. And it was so fast. I mean, we filled out the paperwork, we sent it in. 3 days, 4 days later, the money is already in his bank. Yeah,
Excellent.
normally it would take like a week, but
Yeah.
I don't know. It was fast. We got lucky.
Yeah.
But he was extremely happy too because they're able to access that money in a timely need,
Mm-hmm.
and to fund his business deal.
Mm-hmm.
So talking about the policy for foreign nationals, you would have that same opportunity if you have a policy that needs to be set up the right way. We were talking about tax-free retirement account, TFRA. Those are the things that we associated with these kind of policy because the money grow tax defer and access tax-free, and also you have an opportunity to access when you need it most. And if you don't need it, you can put it back in and, later on access tax-free income for life. So that is really, really big for these kind of accounts. And we're talking about utilizing indexing strategy. If you went through the stock market turmoil in 2008, when the stock market dropped, 30-40%,
Mm-hmm.
a big portion of 401k or saving or IRA wiped out,
Mm-hmm.
right? And in 2022 or 21, when the pandemic hit, the stock market dropped quite a bit too. And I remember when I checked my 401k in 2022, it was dropped down. I didn't have, much, but it dropped quite a bit. I was so sad, but but I assure myself I still have a long way. If you have more than 10 years until retirement, let's say your full retirement age at 67, you still have some time to gain it back. And I'm saying risk can be a good thing because you have an opportunity to gain, but too much risk is not good, right?
Right. Right.
Enough risk is
Absolutely.
okay, but too much risk is not good. And especially closer to your retirement years, where you have less than 10 years toward your retirement, the opportunity to gain back what you lost is harder for people that have a longer time horizon. Let's say, if you in your 50s or 55s and plan to retire in the next 10 years, you would have less time opportunity to gain whatever you lost in the stock market. So we are here to protect your money, whatever amount of money that you don't want to lose. That's what we want to protect.
Absolutely. And, exactly. And planning out, I'm just, as I'm sitting here, I'm thinking about, the extended life, right? What does your next chapters of life evolve to and look and feel like, especially if you're living full life of 120 years and beyond. You really do want to think about, I smile every time I hear about, retirement, but I also think that it's in the appropriate context. Sure, if you're working
Mhm.
on a job as an employee, then yeah, there's a point that you would want to be tired of doing that. I think of owning a business. It's like, I'm not going to retire from the business. I'll have a succession plan. But I don't want to retire from the business. It's part of, our wealth creation machine, right? But nonetheless, when you have an organization where you want to reduce your amount of time committed to it, there are periods of time that, maybe I'm putting in a bunch of hours right now. I don't want to have to put in the same amount of time in the next decade, in order to produce a similar set of outcomes. So I'm doing the heavy lifting now so that there's value. But even with that value, hedging the bet with diversification. And diversification includes things like making sure that you have access to capital and liquidity, because again, none of us have an exact crystal ball that's going to frame for sure, frame by frame, blow by blow, what we have in store along our journeys. So our journeys are always filled with surprises, and we have to find ways to, think through the possibilities so that we can prepare ourselves accordingly.
And preparing for retirement, there's two things that you want to look at: how much you want to save and where do you save it. It's important. Just like you plan a tree, like let's say your life is depend on orange tree, right? You want to plant an orange tree, and to harvest the fruit, and that is your food. If you're gonna plant that in that orange grove in Florida or Alaska, where do you want to plant to yield the most fruit that will hopefully the prolong or provide you lifetime, um, uh, basically lifetime nutritions, right? So would planting in an orange grove in Florida is better than Alaska, right?
Yeah,
Because
yeah,
that would yield you more
sure.
fruit.
Sure.
That's why we were using that similarity in the financial world, is to where do you save your money, and your 401k, your IRA, your stock, your bond, your CD. Where do you put your money to grow if you want
Right.
the most out of it? If you only have certain amount to grow, or just one tree to grow, where do you have a best chance to grow that tree, or that money? So pick a vehicle, pick a soil that give you the most opportunity to grow that money. And also the company or particular products that give you the best chance to protect the money that you currently have, and also an opportunity to grow that money, hard-earned money, over the years that you've been saving. And especially near retirement, you don't want to lose any of it, right? I
Yes.
mean, so whatever the amount that you don't want to lose, let us know. We can help you assess, and we can help you to find a vehicle or a plan that best fit your scenario, and see to protect and grow and expand that for you and protect your family, whether you're here in the US, foreign nationals, or working in US, or living in US only, or just come here for a visit. As long as you have a connection here in the US, business connection, family connections, your kids are going to school here, that is considered one of the nexus or the connection. So that would allow you an opportunity to have a policy here, to have a plan established here in the US. And how wonderful it is when you have an opportunity to to participate in a stable company that provide you the most protection.
Absolutely. Absolutely. Well, here we go. As usual, we have a very wonderful topic with a lot of juicy nuggets. For those of you who are looking at the comments, I gave you the email address. If you have any topics of particular interest, feel free to email us at info, at wealthdoctors.us. If it's topics, if you have someone that you think would be an outstanding guest, we would like to book some more guests for our show. And if you have questions, if you'd like us to clarify a statement that was discussed or a point that was raised during the show, feel free as well to email us for that clarification. And look at it, time.
Hi.
The time has come and the time has gone. So, Doc, it's always great to see you here every Wednesday morning, 10 a.m. Pacific time, where we attempt to share and encourage people to explore wealth creation and sustainable practices that may be helpful. And of course, we're given information based upon our experience along our personal journeys.
Yeah, come and join us every Wednesday at 10 a.m. Pacific time. And again, thank you so much for being with us here today, and have the most wonderful day.
All right. Take care.
Thank you.